Sean and Amy, this is Riddhi with Prospect Mortgage. I spoke to you guys yesterday. I have done all the calculations and Excel worksheets to show you what I think can be done and how can we keep your payment at the number that you want to. So I have four options here available for you. I started with 100, so these are the four different programs: FHA Townhouse, FHA Single Family, FHA 203K, and Fannie Mae. So I'm going to assume we're going to put the bare minimum, so 3.5% on both FHAs, in fact all three FHAs, and 3% on Fannie Mae. So the first option is we are starting with the FHA purchase price 150,000, and our loan amount will be 146,198. Keep in mind it's a little bit more than 96.5 because FHA has what is called upfront MI that I added to the loan amount. That's what most people do. 99% of the people will add 1% upfront MI to the loan amount, so it's built in and you don't have to come up with that money. You'll have closing costs. I'm not showing the closing costs here. I'll show you closing costs in another worksheet. I'm just talking about the down payment at this time. So on an FHA, if you were to buy a townhouse, obviously you need to keep in mind the townhouse. If it is truly a condo, then it needs to be FHA approved. If it isn't a condo, it just looks like a townhouse. It is actually what is called in our mortgage terms a PUD, a planned urban development, or a true townhouse. Then you have nothing to worry about. It will be considered and underwritten just like a single family home. I'm going to assume it's a single family home. If it's not a single family, I'm going to assume this townhouse is FHA approved so we can move forward. So our loan amount is 146,198. Our interest rate is 4.75. Our term in months 360. It's a 30-year fixed program, and our payment is 763. And our mortgage insurance, a factor of 1.15, comes to $140. So altogether our payment is 903. Keep in mind it doesn't show you your real estate taxes, your association dues, and your homeowners. I will come back to that on next page. On a single family, if you were to buy, same price, everything is similar, 4.75, 360, our payment comes to 903. On FHA 203K, we are going to be having a higher rate because you're going to be getting funds to renovate the house. So I assumed our house price is going to be 140. I'm assuming it is, you'll buy it probably 120, maybe 115, borrow some more money. So altogether the price will be 140, and we're going to borrow 131,578. Again, keep in mind it has the 1 point already built in. 768, our payment goes up $5 because of the higher rate we have. Even though we are borrowing less, our payment is higher. But our mortgage insurance is a little bit cheaper. It's 126 because our purchase price is less. Keep in mind, because our loan amount is less, so our PMI is less. Now on a Fannie Mae loan amount, again, Fannie Mae, I did the same thing. I'm assuming if you're going to buy a Fannie Mae, a house that needs a little work, you're gonna get it at a better price, 140,000. The rate is gonna be higher even than a 203K usually because there is no PMI. So we'll get it at 6%. 30-year fixed, your payment is $793 more here, but guess what? No PMI. So you save money there. Monthly payment $793, almost $100 cheaper here for the same house. So that's a good deal. Now let's go down to the scenario where it shows us in 36 months. We would have made, if we were to buy a townhouse, again, keep in mind, does not include your real estate taxes and HODUs. Total payment is 32,000, out of which 7,100 will go to the principal. Rest will be interest and MI paid. Your balance will be 139. So your closing in points I already showed you, 1448, that's getting added. So your total cost is 25,393. And this single family is pretty similar. FHA 203K, your total cost is a little bit higher because we are paying a little bit more. On Fannie Mae, your cost is cheaper because our payment was cheaper. Now forget this, because this section is made for people who are either saving money, refinancing or whatnot, and using those funds either to put it in a bank or reduce their mortgage term. We are not doing either one of those, so we'll skip that section. Now let me show you how our total payments are, because that's what you're really interested in. We already looked at all these things. The only thing I want to point out is, as long as your adjusted gross income, which at this point, based on the information you shared with me, is below 107, you will be able to write off your mortgage insurance. Once your AGI goes above 107, you will not be able to write off your PMI. And PMI doesn't go away till you. There are only two ways of getting rid of PMI. One is obviously to reduce your loan amount from where it was to 78% of the original value. So let me give you an example. Let's say we were to buy a house for 100,000 today, and we put down 3.5%, so our loan amount was 96.5. Our loan amount has to be below $78 on that $100, or the 78% for the PMI to go away automatically. Even then, it cannot happen till first 12 months are over. The second option is, if you come back after 12 months and your property is appreciated, you can get a new appraisal done and refinance, and your PMI will go away. So those are the only two options. Now let me show you the rest of the payments. On a townhouse, obviously you'll have homeowners association dues. I was talking to Terry, and he mentioned that your HOA dues were like $200. Your hazard insurance or the homeowners insurance is going to be a little bit cheaper, because you're not covering everything in the house. You're not responsible for the exterior most of the times. Your $200 takes credit of that, takes care of that. And your property taxes, I'm going to assume it's a townhouse, a little bit cheaper, $4,800. So altogether, your payment comes down to $1,528. This is the most expensive option for you. Second option, which is a single family, same loan, same price, everything same. Um, there is no HOA dues, so you'll save 200 right off the bat. Your insurance goes up because you're responsible for the whole house, goes to the $50, and your taxes are higher. I'm assuming since it's a single family, your real estate tax basis will be higher. Payment comes to $1,403, just where you want it to be. Keep in mind, I haven't really plugged in the tax benefits that you'll have. At this point, you have no tax benefits or no deductions. Once you buy a house, you'll be able to write off your real estate taxes, as well all the interest you would have paid, and it will give you whatever your tax bracket is. I'm going to assume it's at 20% right now, the effective rate of tax, and you'll get that back. So good way to look at it is maybe another $200 a month. FHA 203K, no HOA. I'm assuming it's a single family. Hazard insurance $45. Property taxes $450. The reason I'm thinking hazard insurance $45 because we started with the lower price. Your total payment, including principal, interest, taxes, and insurance, comes to $1,389. Fannie Mae, same house, same everything, 45. I dropped the taxes a little bit because I thought it would be a little bit cheaper, and your payment comes to $1,272. This is the lowest priced option. If you were to find a Fannie Mae home path loan, that would be the right thing, even though your rate is the highest on it. The only concern I have is I did run all the approvals, and that's what took me so long yesterday too, and I just got done. Um, it does not give me an approve. The chances are, can I get it approved for a Fannie Mae? They don't like your profile at 3% down and your credit scores, which are 667. The Fannie Mae, since there is no PMI has a higher risk grid, and they don't like lower scores, so they do penalize you for that. What I think we could do is probably show more money, because I showed the 13,000 that you told me, and another 1,000 in your IRA. I used all those. If we were to somehow put more money down, maybe put 5% down, and show a little bit more in assets, um, what we could do is, if you have, I'm sure you have parents, if you have somebody who could show you as a gift, let's say they could say that they'll give you a gift of 5 or 10 grand. um, you don't have to put down, I would say maybe put down 5%, and then we could try to run the approval and see if that would work. And as soon as the closing is done, you could give that money back, but we need to show the reserves. I am going to play around with it a little bit more. I didn't want to hold on to the paperwork, so I am sending it to you. The Fannie Mae is 50% chance that I will get it approved. Everything else, no problems at all. We are good to go on those. So I'm going to send you this. Give me a call if you have any questions. I'm going to send you another link also. Um, with Excel that you can actually look at it yourself.